The market rockets higher on the Fed catalyst. Can the bulls be stopped? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that if they couldn't hold 47.26, we would be looking higher in a more direct move, and that's exactly what we saw, as when the Fed came out, the market rocketed higher and continued to push into the close. Now the question is, can the bulls be stopped? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, with the move higher, it does change the counts a little bit, so let's jump into the chart and take a look. Okay, guys, so here we are on the 4-hour futures chart for the S&P 500, and what I'm going to do is I'm going to go over what I think the most highest probability count is right now, and then I'll go through a couple of alternates as well. When you have a straight up move like we have with no real pullbacks, you had like a 50-point pullback here, but that's not really a pullback. A 600-point straight up move is kind of an anomaly in the market, so it does make the overall wave count a little tougher to get through, but this is what I talk about in my course. When you have things like this is when Elliott Wave can become a little bit of an art form instead of an exact science. It's a little bit of both, and nothing works 100% the way it's designed to in a textbook, but it gives you a good idea. So the idea here, the primary count would be that we are completing the A wave of the ABC we've been talking about. Remember, this wave 5 up toward new all-time highs would be an ABC pattern, as the whole pattern off of the low would be a giant ending diagonal. So if that is the case, the initial place we were looking for a stop was the A wave of A, and then a B, and then a C for A. And we really didn't get the B wave, so we're looking at all of the A wave in place and a 5-wave move. And even then, you really don't have an amazing structure, but we can look at it as this being A, B, and C up and hitting the 1, 2, 3, 6, which is a secondary target for wave C. So the 1, 2, 3, 6 came in at 47.70, which is about where they closed at today. They can push up to 48.12 or even a little higher than that, but in general, we would be looking for them to pull back off of this area. Now, this would be what I consider the primary count right now. I would not call it overwhelmingly guaranteed. I would just say that given the structure of the market and what we're expecting in a bullish format, this would be what we'd be looking for. And we expected this A wave to complete up here around 4,800. So it's not like we are out of line with this, just the market structure is not what you'd expect to see on this move up. So we'd be looking at the A wave to complete up here around the 4,800 area. Then pull back in B. I would expect a fairly deep retrace in B, back towards 4,350 to 4,400. And the reason for that is for the target to line up in C, we would look for it to be up here around the 4,950 to 45,000 area on the ES, and around the 4,900 to 4,950 area on the SPX. And that would be the pretty natural target for the move up. So what we'd look for here is this B wave to bring it back into the 4,350 to 4,400 area, and then C up from there as our primary count. Now, one alternate count we would look at is that this could still be the overall B wave that we talked about in 2022, October of 2022, we talked about this move up into that B wave high and then a move down, where this would be the A of B, this would be the B of B, and then this would be the C of B, and this does look much like a C wave. So we do have that going for us if this is going to be the B wave up. The negatives about this are it's pretty long in time, and it is also pretty high in retrace. It's much higher than you would expect the standard to be. That doesn't mean it can't be a B wave. It means that it's just a less likely scenario when it does get up this high, unless it's going to be like an expanded B wave or potentially even expanded flat. So from here, or from about the 4,800 ES area, we would want to see 5 waves down. Okay, and if we get a 5-wave move down, then we would start to consider the fact that this was a B wave top. Okay, if we get a corrective move down in B toward 4,340 or 50 to 4,400, then this looks much more like the ABC up. So we would still be counting the waves to the downside to see what we're getting exactly. This move is very straight up, which is indicative of a C wave, so it could very well be C of B. However, given the height of this and the overall size of the structure, I don't think that's necessarily the case. I would much more prefer this to be the A wave and B down for the move higher. The other alternate is that we are in the C wave already, that we already had A and B and they were very small, and C is going to be very extended. I don't like that for a few reasons. Number one, the AB would be very small here. You'd have an A and a B. So in the overall structure, it's not amazing. And then you'd be in the C wave already. And so the C wave would already be at the 1, 2, 3, 6 of A and B. And you would really need it to extend almost up to the 1764 or 2.0 extension to complete this move. Now, this is very possible. It is not that I'm saying it's not going to happen. I'm saying that it is less likely given the size of A and B down here. It just doesn't really add up to that kind of structure. So overall, I am still looking for this A wave to top here at around 4,800, a B wave down, and then C up towards the 4,950 or so area on the ES to give us about 4,900 on the SPX for new all-time highs to complete the cycle to the upside. So the big thing here will be if they push up and continue to push through 48.12 and then 48.81. I think it's very unlikely that we're in A as it's much too high. Really through 48.12 is about where we'd kind of draw the line. C waves can extend, but it would be a very large circle A, and I don't think that that lines up with where we'd have to pull back to in circle B to make that work. So I would say the 48.12 area is kind of the line in the sand for this A, B setup. Otherwise, we'll be looking more at a direct move toward the 49.20 to 49.90 area on the ES. Over on the NASDAQ. Okay, on the NASDAQ, again, pretty straight up move. They gave us a little bit more of a pullback up here at the top and broke a little bit of support. So the NASDAQ does have a little bit more of a structure than the ES, and that's to be expected. The NASDAQ has been pretty impulsive most of the way. So as we look at the NASDAQ, we are extending in this potential wave 1 here. And if that's the case, the next target would be that 16,929 area. We spoke about 17,000. I think if they get to 16,929, they'll probably test 17,000. They got up into the 16.8 area today. So if they're going to continue to push, I would like to see them give us a 4.5 up into that area to complete that structure for wave 5 here of 1 to make it look just a little bit more impulsive and a little better. We don't have really a 4.5 on that wave count. So I'd like to see a wave 4 pullback into the 16,570 area, this little consolidation area right here, and then up towards that 17,000, 16,930 to 17,000 area for the next push up to complete that wave 1. And then again on the NASDAQ, because of the extension of this wave, we would look for a pretty deep wave 2. And then we'd look for a 1-2 setup and then a push up toward the 18,500, 19,000 area on the NASDAQ to give us those new all-time highs. Now, because the NASDAQ has pushed so high, we would now be looking for a potential 5-wave structure to the downside, where we'd be looking for a 1, 2, 3, 4, 5, if it's going to be a bigger failure and they're not going to be able to push out to all-time highs from here. Again, I think these scenarios are a little bit less likely, but I do keep them in the back burner just in case they do rear their head and come forward. We want to know what to look for and what happens if we see that kind of structure. So NASDAQ pushing higher as well. We would like to see a 4-5 here where they pull back just a little bit and push up towards 16,930 to 17,000, and then look for a wave 2 to coincide with that B wave. And then we would look for a move up from there. And then if we do get a 5-wave down for some reason, then we would have to shift our opinion to potentially a more bearish path. Guys, if you like the information I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it'll take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial. Because I want you to get in there, I want you to make sure you love it and become part of the trading team before you ever spend a penny. You can cancel at any time. We also have our Elliott Wave for Beginners online course. This course is helping real traders make real money and finally understand the market in a way that makes sense. When you see good news make the market go down and bad news make the market go up, it can be very confusing. Elliott Wave gives you the key levels and the numbers to understand what happens when they hold and what happens when they break so that you can be on the right side of the market. This gives you a huge advantage over the average trader and is something you really need in your pocket if you want to be successful in the market. The course itself is 25 videos where I go through an introduction of expectations, your mindset, KISS method and why it works, your chart setup and tools, all of your chart tools that you will need to use along with Elliott Wave and how to use them with Elliott Wave to confirm what you're seeing, as well as the Elliott Wave for Beginners area where we go through each of the waves, what they look like, how they work, and why, what happens when they fail. There is the theory of alternation, the corrective depth theory, the pivot, everything you need to know to get a good grasp on a market that doesn't make sense. If you don't want to pay the $67, I completely understand. You can get the course for free. All you have to do is become a member of one of our monthly rooms. In our first room, the Invest with Jacob room, you get all of our real-time market updates, all of our buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the charts and what to expect, as well as the Elliott Wave for Beginners online course. We trade the SPY and the QQQ, and we swing and day trade, which means we do trade quite often. But if you're looking for individual stocks, futures trading, income trading, as well as advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, income trading, where PT averages 5 to 6 points a day, looking for about 100 points a month on the futures, as well as his reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures the trade that's so unique. Something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, the key takeaways for today. Overall, the primary path would be that this is still all of A up. We'd be looking for the next move down, which would be B towards 4,350 to 4,400. And then a C wave up towards the new all-time highs at around 4,900 to or 4,950 to 5,000 on the ES. The secondary paths, we could have a B wave high here, although I think that's less likely. We would need to see 5 waves down, or we could already be in C and extending directly toward the new all-time highs. Again, I think that's a little bit less likely given the overall structure. Over on the NASDAQ, again, pushing higher and up toward our resistance areas. We would like to see a 4-5 up toward the 16,929 to 17,000 area to give us a clean 5 of 5 here to end the move up. And then we would look for a pullback in wave 2 down towards the 15,000 or so area. If we are in a bearish market, we would be looking for a 5-wave drop off of any high that is made. However, I do think that is less likely in this scenario as they are close enough to all-time highs that I think they will push through. Guys, that is your market update for today. I will talk to you tomorrow.